Congratulations, you have just graduated college. Now, it's time to start adulting. Here's a video to help you with that, to help you understand your credit. First thing you got to understand is, what is a credit score? Credit score is a scoring system that determines your ability to repay a loan based on a number of factors. The way the scoring system works is between numbers of 850 and 350. So, depending on how well you pay things back, and depending on various other factors, you will get a score between those numbers. And obviously, the higher your credit score is, the better off you are going to be in obtaining new debt. Now, as mentioned, this credit score is going to be determined based on how well you pay things back. But it is also going to be determined on several other factors. On top of your payment history are other things like the amount that you currently owe and is outstanding, the difference between how much you owe and what the credit limit is, the length of time your credit has been established, how many of those credit lines are new. It's also going to look into the type of credit lines that you have. All of those factors help determine your credit score. Now, here's a hack to make sure that your credit score stays in a decent range. The first thing you've got to understand is that a large portion of your credit score is that current balance to credit limit ratio. So if you have a credit card and the credit limit is $1,000, the closest you can keep that thing to zero on a revolving basis, the better. And in an ideal world, you can keep all balances below 30% of what the credit limit is. Now, if you're looking to build credit right out of college, one of the things that you can do is get a secured credit card. Because you don't have a credit score, or maybe your credit score or credit history is limited, you might have to find a way to obtain and start building that credit. A secured credit card is basically where you go to a bank or lending institution and you give them, say, a few $100s, right? So you're going to give them $200 and they're going to open for you a credit card with a limit of $200. And because you gave them that $200, if you ever miss any payments over a period of 6 or 12 or 24 months, they're just going to take from that money that you gave. But if you pay on time every time, you will get the $200 back and you will be able to have a credit card that is unsecured so you can start building your credit history. Now, as a recent college graduate, there's a chance you have some student loans. Those student loans will impact your credit score. And the biggest thing you can do is make sure you're communicating with your student loan creditor and making sure that you have payment arrangements set up so you're paying on time and every time. That will be a big factor in how student loans impact your credit score. For more information on this topic, check out the blog at moneywellrooted.com/blog. Be sure to subscribe to not only this YouTube channel, but to that blog for all the updates of all this awesome free financial content that we have available for you. Most people fall into YouTube holes that aren't productive. Subscribe or check out some of our other videos by clicking over here, and I promise it'll be a YouTube hole worth your while.